Good afternoon, everyone. In today's video, I'd like to talk about a setup inside of Levi Strauss, that's ticker symbol LEVI, and this is a bullish setup which I think is going to be in a bit of chop mode for quite some time, and I'd like to try and take advantage of that. Now, I'll start by first talking through the technical setup side of things, and then in the second part of this video, I'll share 3 different ideas to try and play it, with the first one being my favorite, which is running the wheel inside of Levi. Now, starting off here, we're going to use the weekly time frame, and this is really where I think the setup starts for me and the time frame I'd like to focus on. Off of the weekly time frame, we have really, if you take the high and then the next high, lower highs, you can draw a steady declining trend line. And if you try to use some sort of horizontal support, then you have a wedge in which price action is starting to chop in between, or you could even draw an inclining trend line here. Again, giving you this idea that price action is chopping around sideways, the range is becoming narrower. Now, the reason why I have a bias that we break towards the upside, we've been chopping around here at the 1272 extension from really the period in which Levi's entered the market down to its lows. And so my bias is that we break above the 1272 and start to head to the 1618 at 34.02. Now, another thing that's on our side there is the squeeze. This is off of the weekly time frame, however, so we don't really know when this is going to fire, and I think baking in time is a good idea into whichever strategy we choose here. So that's off of the weekly time frame chart. Now, if I come inside of a daily time frame chart, it doesn't look as clean. On a daily time frame chart, if we zoom in, the moving averages don't really indicate as clear of a direction as they did on the weekly time frame. They are stacked, but you'll notice here we went bearish stacked, bullish stacked. It's really just been a whole lot of noise for the most part. We do still have that same range. You can get in on a bit more granular detail here, that range that Levi's has really been there now for close to 106 days or 75 bars. So that's been quite some time. Looking at this range to now start to get narrower and narrower. The very bottom of this range, right around 24-ish or so dollars, 24.50. The upper end of this range, if we're now using this trend line, closer to that 29 mark. So those are going to be the levels that I focus on when we get to the wheel strategy, which this is probably a good segue to do so. Before that though, one last point. Off of the daily time frame chart here, also have a squeeze forming. I would argue that even though this looks like we're increasing momentum, the price action here doesn't really suggest that. So really expecting more chop here. Overall biases, we break to the upside, but I'd like to really be a seller of puts first to initiate a position below this 24 mark if I can. So knowing that piece of knowledge, let's now head inside of our trade tab here. And the series that we can start focusing in on in terms of selling premium could be the September 17 series. That's 31 days to expiration. 24 is the price we said we'd like to be ideal buyers at. So if you sold the actual 24 puts, that's 20 bucks to 30 bucks. So let's call it the midpoint right now. The percentage return on that position, 0.72%, gives you a nice break even, but 0.72, a little bit too low in my opinion. So let's try and come down to another strike here. Maybe try, say, the 25 series. 25, we're getting, let's call it 35 bucks, 1.48% for an average break even of 24.59. And if we take a look at where 24.59 takes us onto the chart, that's into what is our previous low of this range. So if we were assigned there, I think that's a position I'd be comfortable taking, or taking assignment of rather, and then trying to sell calls against that position at that 25 or 26 mark, depending on where price action is at the time. So that's one way to try and play it, and that's if you're looking for the closer dated expiration series now, 31 days out, looking at that 25, which would be a delta 18 put, looking to try and get a sign there, which would give you a break-even price of 24.59. If you expand this out now to 59 days, give that same trade idea a little bit more time, your premium on that 25 put is increasing to 75 to 90 bucks. Let's call it 85 there. That's a 2.92% return for about 59 days of holding, assuming you go all the way down to expiration, giving you a break even that's slightly better, 24.19. The 31 days, though, I think has options decay in your favor, where you can start to take advantage of theta starting to really work in your direction, especially if price action stays above that 25 mark. So that's the first idea. It's selling puts to start to initiate a covered call position, selling that 25 put right now, right around a 1.48% return. And if you do get assigned, then come right back in and start to sell closer towards your strike prices, so closer to the at the money calls, where currently that is ranging between 2.5 to 3.29%. So that's one way. In case you'd like to skip the cash secured put section, then you could start to enter the position using covered call as your defense for this chop. But bear in mind your downside there is you're entering with a cost basis that's at a higher cost basis compared to getting assigned near that 25 mark. So that's one idea. Now, option number two, for those of you that would like to skip this entire wheel strategy, that's where I think coming out and giving more days to expiration here, knowing that we've been in the squeeze for quite some time, it's off of a weekly time frame, come into something like either the October series or even something like the Jan series and look at a break above price action where we have our previous resistance, 29. And if we come right back in, build something like a 29 or 30 put or call debit spread, excuse me. So if we try something like that, that's going for right around a 40-cent debit, so you've skewed the reward to risk ratio slightly in your favor. If you bring this down one expiration series to the October, where I think you may not be giving it enough time, there you can reduce your cost down just a little bit more, down to 35 cents. So that may be another option for those of you looking to try and play a shorter move inside of Levi's. And the last way, which is more of a lotto ticket sort of approach here, is crafting a butterfly around the strikes which have the greatest open interest. So if I expand all of these out right here, there's two that stand out in mind. If you use the 3 days to expiration series, we have a strike of 30 with an open interest of 5,114 contracts. So that's one that stands out. But that would really entail right around, what, a $2.50, slightly above that move. And what's baked into the actual options market, right around 89 cents. So I would expect this option to really expire worthless. However, if we expand down into the October series, that same $30 strike price, 3,107 open interest, which stands out a lot more when you compare it to the rest of the series. And so to recap, the idea here would be to be a seller of the $30 call inside of the October series. You can craft that either with a $2 wide or something of that sort butterfly, or even buy the $29 call and sell the $20 or $30 call against it. Either way, you're trying to be a seller of that $30 strike and collect that premium and try and play the idea that a majority of those contracts will expire worthless. So those are three different ideas that you may be looking at. Again, my personal favorite out of the ones we've discussed is running the wheel inside of Levi's, using something like the $25 put as a means of trying to enter the position, a nice break even towards the bottom end of the range, and really looking at playing this on more of a weekly time frame chart here, avoiding the noise of the daily time frame, looking to try and play the squeeze on a bullish note all the way into $34.02, and hopefully getting a few different iterations in terms of either selling puts as repeated income or as selling calls if you do get assigned, to try and play that move into 34. All right, I hope this video was helpful. Take care, everyone. Good luck trading, and we'll see you in the next update.